which would obviously affect the companies making them and their share prices. And remember, the BRICS nations control super important commodities like rare earth metals, oil, agricultural staples. So any export restrictions could ripple straight into the US manufacturing sector, energy, defense, and everything else. But then there's the long-term threat, the one that doesn't really show up in the next quarter's GDP, but it could change the foundation of the US economy. If BRICS expands by trading in yuan, rupees, rubles, or whatever future shared currency, the global demand for US dollars will go down. That means less countries using dollars, and that means less buyers for US Treasury bonds. And with foreign ownership of treasuries already going down to about 30% of outstanding US debt, means that if this keeps on going, it could push interest rates much higher, making it more expensive to finance US deficits and more expensive for us as consumers to borrow money. Because remember, how do you incentivize people to hold and buy US investments and our debt? You reward them with passive income, with higher interest rates. But that affects us as well. On top of that, the sanctions the US uses, which is one of its most powerful geopolitical tools, also becomes less effective when less countries need the money to trade with. So the markets are kind of reacting. That's why you've seen bond yields have been very volatile in 2025. And also safe investments like gold and Bitcoin have been outperforming, and we've seen an inflow of money every time there's some BRICS currency headline. All around the world, I think other emerging market economies are watching this fight really closely, and they're deciding whether they want to side with the US and its dollar system or the BRICS bloc. So here's how I'm personally thinking about all of this. This is a trend that's been going on for decades. It's a story we've heard a lot about, and I think it's a story we're going to keep hearing a lot about. This is just the world changing. It's the world adapting. For me, the selfish question is, how would this change affect my way of life and my savings and my investments? Because for decades, we've had this world where the dollar's strength has had a huge built-in advantage for US investors. There's cheaper imports, lower borrowing costs, higher purchasing power when traveling overseas, and it's made a lot